those two guys who created that are two of the smartest young men in the whole country.
They make lots of money. They earn fantastic returns on capital. They look very tough to dislodge where they have their strengths. I would not be at all surprised to see them be worth a lot more money 10 years from now.
It was not at all obvious that it was all going to work as well as it did.
Buying a high return on assets, very light capital intensive business that's going to grow beats the hell out of buying something that requires a lot of capital to grow. Probably the 5 largest American companies by market cap, essentially you could run them with no equity capital at all. None. That is a very different world than when Andrew Carnegie was building a steel mill and then using the earnings to build another steel mill and getting very rich in the process, or Rockefeller was building refineries and buying tank cars and everything. Generally speaking, for a very long time in our capitalism, growing and earning large amounts of money required considerable reinvestment of capital and large amounts of equity capital. That world has really changed, and I don't think people quite appreciate the difference. You literally don't need any money to run the 5 companies. There's no question that a business that doesn't take any capital and grows and has, almost infinite returns on required equity capital is the ideal business. That's a far, far, far better way of laying out money than what we're able to do when buying capital-intensive businesses. When Google can sell you something where Geico was paying $11 or something every time somebody clicks something, that is a lot different than spending years finding the right site and developing, iron mines to supply the steel plants and, railroads to haul the iron to where the steel is produced and distribution points and all that sort of thing. Our capitalist system basically was built on tangible assets and reinvestment and all that sort of thing, and a lot of innovation and invention to go with it. But this is so much better if you happen to be good at it, to essentially be able to build hundreds of billions of market value without really needing any capital. That is a different world than existed in the past.
It's a wonderful field, but not everybody's going to win big in it. A few are going to win big in it. What was our worst mistake in the tech field? I think we were smart enough to figure out Google. Those ads worked so much better in the early days than anything else. So I would say that we failed you there. And we were smart enough to do it and didn't do it. We do that all the time, too.
Yeah, we were their customer very early on with Geico. We were paying them $10 or $11 a click or something like that. And anytime you're paying somebody $10 or $11 every time somebody just punches a little thing where you've got no cost at all, that's a good business unless somebody's going to take it away from you.
Well, we've always known that the dream business is the one that takes very little capital and grows a lot. And Apple and Google and Microsoft and Facebook are terrific examples of that. They're going to make a lot more money than we do. They're in better business. It's a much better business than we have. And so in Microsoft's business is a way better business than we have. Google's business is a way better business. We've always looked, we've known that a long time. We found that out with See's Candy in 1972. They're the best businesses, but they command the best prices too. And there aren't that many of them, and they don't always stay that way. So we're looking for them all the time. But that's what everybody's looking for. That's what capitalism is about, people getting a return on capital. and the way you get it is having something that doesn't take too much capital. I mean, if you have to really put out tons and tons of capital, the utility business that way, it's not a super high return business. You just have to put out a lot of capital. You get a return on that capital, but you don't get fabulous returns. You don't get Google-like returns, or anything remotely close to it. The Googles and the Apples, and we don't own Google, we don't own Microsoft, but they are incredible companies in terms of what they earn on capital. They don't require a lot of capital, and they gush out more money.
If you can build a moat, it can be incredibly valuable.
I saw at Geico that we were paying a lot of money for something that cost them nothing incrementally. So we've looked at it, and I made a mistake, and
not being able to come to a conclusion where I really felt that at the present prices that the prospects were far better than the prices indicated. But the answer is we'll miss a lot of things or I'll miss a lot of things that I don't feel I understand well enough. That's the way we'll continue to do it. We'll try to stay within our circle of competence. And Charlie and I generally agree on sort of where that circle ends and what kind of situations where we might have some kind of an edge in our reasoning or our experience or something that where we might evaluate something differently than other people. But the answer is we're going to miss a lot of things. Charlie?
Yeah, we have a wonderful system. If one of us is stupid in some area, so is the other. And of course, we were not ideally located to be high-tech wizards. You know, how many people of our age quickly mastered Google?
Like I say, at Geico, we were paying them a lot of money. It wasn't like what they were doing was a mystery to me. The mystery was how much competition would come along and how effective they would be. I made the wrong decision on Google.
The shareholders have one thing to be thankful for. Some of the age-related stupidity at headquarters has been ameliorated by Ted and Todd joining us. We are looking at the world with the aid of some younger eyes now, and they've had a contribution
Significant.
beyond their own investments. And so you're very lucky to have them, you shareholders. Because there's a lot of ignorance in the older generation that needs removal.
It wasn't hard to figure out who was winning at any given time or what their business was about, but there were a huge number of people that knew more about the game than I did. And we don't want to try and win at a game we don't understand. We'll still stay within where we think we know what we're doing, and obviously we'll make mistakes even within that area. We'll do our best to enlarge the circle of competence of the people at Berkshire so that we don't miss so many. But we'll miss a lot in the future. We missed a lot in the past. If we miss the biggest ones, that really doesn't bother us as long as the things we do with money work out okay.
Warren and I are a little older than some people, and
Near everybody.
and we're not the most flexible, probably in the whole world. And of course, if something as extreme as this internet development happens, and you don't catch it, why, other people are going to blow by you. And I don't mind not having caught Amazon early. The guy is kind of a miracle worker. It's very peculiar. I give myself a pass on that. But I feel like a horse's ass for not identifying Google better. I think Warren feels the same way.
Yeah.
We screwed up.
He's saying we blew it. We were using them at Geico, and we were seeing the results produced, and we saw that we were paying $10 a click or whatever it might have been for something that at a marginal cost to them it was exactly zero, and we saw it was working for us. So
we can see in our own operations how well that Google advertising was working, and we just sat there sucking our thumbs.